everyone. It is Money Talks, Money Africa's podcast. My name is Oluwatosin Olasende. I'm the founder of Money Africa. Money Africa is a financial literacy platform that leverages on technology to simplify everything money. Guess who I have here today? The one and only Chidinma Okoli. So Chidinma, tell me, what have you been doing for the past 5 years? And who are you? I want to tell the viewers, who are you?
Thank you, Tosin. Hi, everyone. Good to be here. So, first of all, who I am, I'm Chidinma Okoli. I think I wear two hats most times. In my day job, I work in VC, so basically investing in like African tech startups. And then my 5 to 9, like I run a personal finance company as well, where I kind of like just look to break down personal finance concept for young people. So yeah, that's kind of like what I do on the two means. And then also like, I enjoy off hours as well. And then what I've been doing for the past 5 years. So I would say I've basically been investing actively in African companies, right? So across like early stage to like, growth stage as well. So like just watching companies, grow from like having like 0 to 1 employee to like seeing them raise Series A, Series B. It's been very interesting because like, you get to kind of like work across different companies sectors, but like also different company growth levels as well, and then also just also growing my personal finance brand as well. So yeah, that's really what I've been doing.
I remember I found Chidinma on Instagram with Finlead Africa, educating people about personal finance. But I found her story very interesting. Chidinma is in her 20s and she has done a whole lot for herself, in that space, going into the VC space and all of that. And I just wanted her to be able to speak to us. You're talking about early stage growth. You're talking about seed A. You're talking about risk. Can you just dump it down for us? What is an early stage company? And then afterwards, if I or even any other person that is in their 20s and their 30s, they wanted to invest in companies like this, what should they look out for? Just educate us.
Okay, so typically, when you look at a company has different lifespans, right? So typically in the venture capital world, the way it's said is before a company, there's an idea, right? So it's an idea stage company, right? So you only have an idea, you haven't begun yet. So then your idea stage. And then, so you can raise like something called a pre-seed stage funding because like your idea, like, so you're still pre-seed, right? And then, so let's say maybe you raise like your pre-seed funding, which is mostly from angel investors at that point because you don't really have much traction. So you raise pre-seed stage, and then you kind of like you launch your product, like you go into like beta mode, or like you launch a new product into the market, and so with that you now have like a actual product. So then you raise a seed stage fundraise, like so now you're a seed stage company, and so typically companies around that are maybe between 0 to 2 years or even 1 year depending on that, and then so you raise your seed stage, and then what's next is your Series A stage. Basically, this just means that okay, you've passed seed. Now you have like a product that works, in the market. You have traction, you have paying customers, and so maybe you're looking to expand to maybe say other market or like other countries. So you raise a Series A funding, which is like it's much more growth stage. So I would say basically pre-seed, seed, and Series A and series. So Series A, so it could be Series A, B, C, D, E. So yeah, so depending on like how much you're raising. So you can raise, let's say, a 2 million Series A, 4 million Series B, 10 million Series C, and so on. All that is growth stage funding because, like, now you're growing and growing and growing. But really, so for like a very early stage business, like you start from pre-seed and then grow to seed and then grow to series or growth stage and then just keep on raising and from there. So that's kind of like how to think about company stages.
Fantastic.
Yeah.
So now what Chidinma is saying is like, we need to have like, you're thinking about pre-seed, that is before idea stage and all of that.
Yes.
So now once we have idea, we have a product, now we're talking about seed, right? And then when we start growing, like we're seeing traction, we're not talking about all the different series.
Yes.
It's so interesting. There was a time I was reading an article. I saw a company raise Series G. I said, ha!
Yes. Series G day.
So it's
multiple years series. Because so typically after the series, then you go public.
Yes.
But then sometimes, depending on like how the market is, you might not want to go public.
So what is going public for people that do not know what going public is?
Okay, great. So when I said I work in venture capital, right? Basically, I invest in companies, but like private companies. Right, so companies are either private or public. Private are like their shares are not on the public market. Like you cannot go today and buy, let's say, Paystack shares on the public market because like it's only in the private market, which is where VCs play in. But so typically what happens is that VCs come and invest in companies and then grow them up to a stage where they can now go to the public market and then become public. So companies will raise like maybe say Series C, Series Z, and then depending on the market, they will now list and go public. What that just means simply is that they can now raise money from the public. So now, like MTN for instance, I can go on my app and say, okay, I want to buy Paystack shares. Today you can't do that because it's not public. But if they go public, then you can do that. So basically, it's just saying that, okay, where can I buy this company shares? Private market or public market. Yes, so that's really
fantastic. The difference between the private and public market, which makes so much sense. It's a lot of dream for a lot of startups to be able to issue an IPO, like Chidinma said, being able to go to public where people can just come into that market and be able to buy it, where there are ready buyers and ready sellers in the public market, which makes so much sense. So my next question to you is, we get a lot of women and even men asking us, Tosin, I want to invest in startups. How should I go about it? Come on, teach us, please.
I mean, so very valid question, but I like to always say, like, first of all, it's very illiquid. That's the first
What
thing.
is illiquid?
Okay. Basically, it just means that you cannot sell your shares and get cash today. So if I have MTN shares now and I want to liquidate my shares today, I can just open my app, whatever, and say, okay, click sell button and I'll sell and I'll get cash maybe tomorrow once it clears. It's super liquid, is cash today, But with private market, you cannot just say, oh, today I want to sell my Paystack shares because who will buy it, right? Because it's not easily traded. You have to maybe go back to the company and then they'll do secondaries, very complex. So basically, the first thing to know that it's not, if you need your cash tomorrow or next month, it's not that it's not this asset class. Basically, this is highly illiquid. It's not very easily changed to cash. It's also very long term as well. And just see what I said. So let's say maybe you invest in a company's pre-seed stage. Let's say in 2020, for instance. Across all these pre-seed seeds, Series A, C, it can take 5 to 7 years. Typically, that's the normal lifespan before a company goes public, about 7 years. So you might have to wait until 7, until the 7th year, to kind of get your big, cash back IPO. Of course, you can also maybe exit, during a Series A or B or whatever. But if you want to wait for the biggest payoff, is IPO, and then that's in 8 years. So it's very illiquid. It's super long term, and it's also very high risk.
Tell me more about the high risk.
Oh, yes. So, think about it is ideas are a dime a dozen. Anyone can have an idea, but it's not all ideas that will become into fruition. And it's not all ideas that will actually grow to become the next Facebook. I think the stats say 1 in 8 or so startups fail. Right. So even with VCs as well, even with our business is to actually invest in startups. Most times you hear the people say that, yes, I'm putting money in 20 companies, but really I'm only looking for that one company that will pay back my entire investment. Because it's very, things happen. Again, we are also in Africa, the macro economy is not great. If you're earning revenue in Naira, you're fighting for your life because USD is always the whole currency thing, and you probably have to even repay your investors, in USD as well. So it's very high risk in a sense that there's just so many factors that can make a company to fail. And a company that is still at the very, very early stages, they have a very, very, very low chance of actually winning and actually making it. So what that means is that you can invest today and literally your company fails. If you're in tech Twitter, I think earlier this week or so, a company said, and that's part of the cost. And they have raised money, they have investors. It's peace, we go again. And so that's just what happens, right? So you can put money in a company today, and by tomorrow, there are no more. And there's nothing because again, it's equity, it's not debt, right? So maybe we should also do a differentiation, right? So typically with debt, so if let's say maybe I loan a company money today, they're paying me interest every single month, right? So at least even if they don't pay me the final principal, at least I've gotten some monthly payment, right? So at least I have some money back. With equity, they're not paying you anything. It's it's vibes. It's saying, don't worry, I'll give you 10,000 USD today, and I'm believing that tomorrow you will grow from a 100K business to a 1 million business, and then my 10K then will be worth 100K. So it's if they grow, awesome. If they don't grow, if they go to zero instead, everything is gone basically. So it's high risk but also high reward. If they get to the peak, is payoff. If they go down, is also like, you lose your home money. Like there's no legal cost for you. So going into it as an individual, I always say like, look, first of all, you should only invest money that you don't need. It's like long term money that you don't need today. Like it's not your rent money, it's not money for your kids, it's not money for your MBA program. It's like long term wealth building. Yes. Like, so kind of like the way you think about stocks, but even more, I believe that VC is actually more riskier than
it
stocks.
is riskier. Yeah, let's be honest. It is riskier than stock because it's not listed.
Exactly.
It's not as liquid as stocks.
Exactly.
It is riskier.
Exactly. Like, so like there's no information. Like there's lots of like things like it's like you're kind of almost investing in the dark, sort of, depending on what stage you come into. So yeah. So before I kind of like go into that, just know that it's very high. It's highly illiquid. It's very risky as well. You can lose basically everything, and it's also very long term. So keeping that at the back of your mind, if you still want to progress, then how to actually start investing in startups, right? So, I mean, you can invest in mostly two ways, right? So you can either invest as an angel investor, so like maybe investing as me, Chidinma, was toasting, or you can actually invest with a VC fund. So like an actual fund that is set up, to invest in companies. But typically, these VC funds don't raise from you and I. They raise from like, big banks, like, family offices, like,
high net worth individuals.
Yes, because like typically most funds like, have very, very large assets under management. So for me and you to have like, let's say maybe 1K USD or even like, 500, like, whatever. How can you invest? So typically, I always advise beginners to go through syndicates, right? So like a syndicates club. And what does that mean? If you're familiar with, again, like stock market, you must have heard of like a mutual fund, right?
Yes.
So a mutual fund basically says that instead of you going to go and buy Facebook today by yourself, you can actually invest in a stock mutual fund that will actually, like these are like pros, like this is their job where they actually like, help you do the research, help you do the entire selection, and then help you invest your money. Very similar process as well with a syndicate where you like group of people come together and say, okay, this company wants to raise 100K. I don't have 100K, but if you are 10 and bring like 100 and bring 1K together, then we'll get 100K and then we'll invest. And also, what that does is that because like it's a market where there's not much information, as a syndicate, like they have more expertise, most times in this space. So like they can actually help you kind of like negotiate terms with the company, agree on valuation, like the process, like okay, is it a safe, is it equity, all that stuff, and then you just have to just give them your money, and then like they basically invest for you. There would be like, so there's typically like a trust agreement between you and the syndicates that ensures that they're actually acting on your behalf. So again, very similar to a mutual fund in that sense. But yes, but like that is actually how you can actually start to invest in startups through like an angel club or a syndicate. And like there are a few of them in Nigeria. I don't know if you can like call names, but like there are just lots of them that allow you, some with like $100 like is their minimum entry, some 1K, whatever, but just find what works for you. But I would always say it's best to go through a syndicate because like it's just, it helps you to like further the risks, because again you're a newbie and you don't really know how it works. And then if you do that for a bit and like you're also growing your own knowledge, and then you can now maybe also growing your capital as well. Then you can now move to investing directly in this company, because also as well, even as a company, if they don't know you, companies are also like wary of who's on the cap table.
That's true.
Exactly.
True.
Yeah. So like they wouldn't take like a random John's or random Janet money because
it comes to risk. They don't want fraud money in their business as well.
Exactly. Yes. They don't know where you came from. Exactly. Yes. But with the syndicates, they kind of like already do that work.
Due diligence.
Yeah, exactly. Yes. So it's on both sides. It's both you as well to the company, and then company as well also is also like dealing you too. So yeah.
Oh wow! Did you guys hear all of that? The knowledge, the wisdom. I'm such a huge fan of Chidinma.
As I am of you.
I'm so proud of her. Chidinma is in her 20s, right? And it's just really interesting to see you being in this space, investing, sharing knowledge, and just educating people about how to invest. My last thing for you is, what would you say, like, how, as you, a young woman in your 20s, how are you investing?
Very good question. So how I'm investing. So again, like, actually, thank God that you mentioned age, because like again, investing is very different based off like your age and where you are in life. Like I said, I'm in my 20s, and I believe that I have time, and time is my biggest asset, right? And so I'm like thinking about, I have time. How can I invest in? How can I get like the biggest payoff? And what that means is that I'm also like I have to get like higher risks as well. Because I don't have kids, like I don't have much, like I'm basically one man, I'm on my own, right? So I'm really focused on high risk assets. That will give me like high return as well. And then like as I grow older, then like I kind of like start to rebalance. But currently, I would say I'm investing mostly. Mostly in private companies. I'm really heavy on private companies now because like the stock market hasn't been doing very good. Like it's a good time to buy. So I would say my portfolio will be like, let's say 40% angel investment.
Wow.
Yes, I'm putting my money where my mouth is.
Wow.
And I'm also aware that I can lose all that money.
Yeah, I know you're young, but even if you do, you can catch it up.
I will learn.
Yeah.
Exactly. Like, so I remember when I made my first stock investment, I lost all the money, but I've learned and I will never lose that money twice,
Yeah.
So I'm like, you know what? I'll learn. Whatever. I'll learn.
I love it.
So I'm really like angel investment, and then also I have like some stocks, as well, mostly global stocks, because I don't know if this makes me
it's okay. No, go ahead.
Patriotic Nigerian, but I think like maybe it was 2020 where I did a mass and I saw like my Nigerian stock portfolio, like I had gains, right? But then when I converted it to USD,
the devaluation wiped off your gain.
Exactly, right? So it's like in dollar terms, I lost all the money, but like in Naira, I made money. And I have to be like, what, Chidinma, what are you benchmarking against? Are you benchmarking your wealth against Naira or USD? I'm benchmarking against USD because I'm a global citizen. So I was like, you know what? It go be. So I sold all my, I sold all my Nigerian stocks. And so now I only invest like, in US and like in China market, like basically like, global market. But like, I'm very keen on like seeing like the market develop. I think once we kind of like hack this currency issue thing, like happy to.
Yeah. And also some people also have expenses in Naira. So for instance, there are some Naira stocks that gives you like dividend yield of like 10%, 11%. So in those cases, right,
exactly,
it still works. So there's still some diamond in the rough,
yes, exactly.
in that market. It's not a complete write-off, but you also have to look out for yourself as well to balance your portfolio and have USD assets.
Yeah. Actually, my emergency fund actually is in Naira mutual funds.
You see
exactly,
now.
Yeah.
Exactly.
About, like,
so
it's true.
So it makes sense how to just sort of balance and
yes,
things like that.
Yes.
So I think the last thing is, what are you excited about? What do you think the next 10 or 5 years could look like?
For myself or like for the economy?
For yourself.
Oh, wow. Wow, yes. Like I said, like I actually got into VC in 2018, surprisingly. Yes. And so this is my 5th year. And I'm just like, wait, what? Like, how is this your, like, madam, how did you get 5 years? Like, I'm a baby, right? But I think the last 5 years for me has been just lots of learning.
Yeah.
Because like I got into VC like straight out of university. In fact, I have like a very funny story around how I got into VC. It was very random. So I think I had finished. Can I go into it?
Go into it.
Okay, sure. So I'd finished like uni. I was doing like my NYSC, and then I took part in this program at the Lagos Business School. It was like a 1-week mini MBA program for like they pick 50 core members across like Nigeria and then bring them there. I think it was done by Jan and I think Accenture at the time. Anyway, there was a job fair at the end, and then like people came to hire. Now in 2018, the job prospects for a new finance grad is not VC. It was investment banking. That was the popping thing. VC just became hot now.
Yeah.
VC was like exit for IB. So you do IB, then you get to like private equity or VC.
For those that don't know, IB is investment banking.
Yes. Yeah. Exactly. So like me, I was angling for IB roles. Like I was like, please, I want to like, get into like all the top IB firms. But then these guys came and be like, oh, like, they did like, like, I actually like I like your experience. You have some entrepreneurial experience from my Finlit Africa that I was doing, which was just again like passion project. But like that, it shows that that you have like that you're proactive. So like, what, come join us. I was like, okay, actually, what, I can just do it for like 6 months internship and then leave and then go back to my IB role hunting. But I got this was C Hub, like so the tech accelerator. So I got in there and I think like I was just stunned at how like it was a mixture of tech and finance, right? It's like how I'll see companies that came out like that come in with like just idea and then leave with like stuff. I'm like, wait, how like this is like it was just super like
exciting.
Yes, exactly. Like for me, like just seeing how ideas were moving to product and like to actual companies, right? And so my 6 months ended. I was like, I'm staying here. It's like I'll stay here, and that 6 months has turned to 5 years now, and like I'm still like very keen about it. So I would say like the next 5 years for me is really like about growth, right? Like so, like maybe even being like a fund manager,
You never can tell. Why
Who
not?
knows? Yes, like because I mean I feel like Africa still have like lots of ideas and companies that we don't still have like enough funding coming into Africa. Also, we have like money, wealth in Africa that people are not
deploying
exactly towards VC because like it's so risky, right? So hoping to help unlock some of those typical finance that we have here, like into this market where it's like there's lots of room for growth and like for returns, as well, if you can just stay the course. So yeah, I think over the next 5 years, more VC, of course, more like I'm an investor, like that's who I am. So like more investing, more deal making, and yeah, like also just doing more of like personal finance as well, and just making sure that people that are young as well like know that you can.
This is an option.
Yeah, you can do this.
Great, thank you so much for this. I really enjoyed this session, and I hope you enjoyed it too. How to invest in startups, learning about VCs and things like that. So guys, this is Money Africa. Money Africa leverages on technology to educate people about money. This is our podcast called Money Talks. If you enjoyed this, do not forget to share this with your loved ones, your frenemies, and everyone that needs to know about it. Thank you, and catch you on our next podcast. Bye.
Bye.